U.S. natural gas futures are limping into the weekend, stuck in a steady downturn as weather models trend warmer and traders ignore what would normally be bullish storage data. Meanwhile, many traders are now questioning if warmer forecasts will continue to pressure prices. Well, right now the answer leans toward yes. Markets were hit hard on Thursday after updated guidance from advanced models pointed to an unusually warm pattern taking hold from December 16 to 25. That shift sharply cut heating demand expectations at a time when prices were already fighting to hold support. Even with colder systems pushing through the Northeast and Midwest this weekend, next week's warm-up is expected to flip the broader demand tone from elevated to sluggish and fast. Thursday's sell-off came despite a stronger-than-expected withdrawal of -177 billion cubic feet, beating consensus of -170 billion cubic feet and more than doubling the 5-year average. In most markets, that would spark a rebound. Not here. Traders shrugged it off and zeroed in on the bigger bearish backdrop, robust supply and the looming demand hit from mild December weather. Meanwhile, supply continues to work against the bulls. Dry gas production climbed to 112.4 billion cubic feet per day on Thursday, up 8.3% year-over-year and flirting with record highs. LNG feed gas flows also softened this week, slipping 4% to 18 billion cubic feet per day, adding yet another layer of weakness to an already oversupplied market. With the front-month contract already down more than $1 since last Friday, traders are desperately scanning the charts for any sign of a technical bounce near the October 29 low at $4.05, but heading into Friday's close, there isn't much else propping up the tape. At first glance, January futures look like they're inching toward a $3.90 floor. But a closer look at the front-month chart tells a different story. There's still plenty of room to fall. The first meaningful support doesn't show up until the $3.40 zone, and that's essentially where the market's fair price is sitting at this moment. All traders understand that any significant gap in the market is rarely left open for long. Sooner or later, price action tends to move back to fill it. Nevertheless, I don't expect prices to fall that far, as the bulls are still desperately hunting for any hint of cold in the weather models, and there's no doubt they'll jump on it the moment it appears. Technically, traders are watching the $4.05 low as a key pivot. A bounce here is still in play, especially with prices stretched and the potential for weekend profit-taking. However, reclaiming the 50-day moving average at $4.48 remains a tall order unless the weather narrative shifts meaningfully colder and quickly. Nevertheless, if the $4 support gives way next week, the prospect of a deeper slide becomes far more credible. In that case, a move toward the $3.40 support zone on the front-month futures chart would shift from a distant risk to a realistic near-term scenario. If you enjoyed the video, drop a comment, hit like and consider supporting the channel. It really helps keep things moving, and see you next time.